Good afternoon, everyone. It's 4 o'clock here in the UK on Tuesday, the 2nd of February. And I'm looking at VectorVest US, which has been running now, an hour and a half. Another very strong day. That's two strong days in a row after Friday's sell-off. As you can see, the number of advances twice that of the declines, and the Dow Jones Industrial Average up 545 points. That hasn't been enough to push the short-term trend on VectorVest back to up after the strength of the sell-off at the heel end of last week. And if you look on the intraday market, you can see that the market has in fact risen to 78% of the sell-off, and that's quite an important number for the fib analysts. I think it'll bring out quite a few shorts at that level, so we would need to get up through that level on the S&P. I'll put up the S&P for you in a second. The short-term trend is down. The medium-term trend on VectorVest is still up, and the longer term trend on VectorVest is still up, but the advice here is still not to buy any stocks. And I've looked at a few stocks, and I like the look of Gravity, particularly like the look of Amazon. So let's have a look at these, and these are just a few, folks. There's lots and lots in this market. If the market does in fact break up and break up strongly through that 3835 level, which is 78% of the sell-off. We'll get to that in a moment. So I just chart those very quickly, and this earnings per share on Gravity is a very small company, and you need to be very careful about liquidity concerns in this, but it's a great example of a Wyckoff spring, and as you can see, this came right to that lower level. And if I put on the stochastic here, you can see that there is a beautiful and textbook reverse divergence on the stochastic. The price is rising, and as you can see, that tail came right back to that trend line, and that is falling. And this is a beautiful spring formation, and as soon as the short-term trend on VectorVest says it's safe to buy into the market, then that looks like something that I will have a go at. Amazon seems to have gapped this morning, and that's a very important gap. As you know, it's an earnings day, and if we actually go back, stochastic off, we go back to a year's data, we can see this triangular formation, and we're playing for one hell of a lot here, because that could easily be repeated over this period, which was only 6 or 7 months. That is one hell of a target. So if we have a look at earnings per share, if I can find it, there we are. You can see that during this consolidation, earnings per share has gone up by 50% odd. And it is my experience that if a market goes sideways and earnings per share grows within that consolidation, that it does what it's supposed to do. So and that would be to break upwards. So that is certainly it's an expensive stock. You don't have to buy 1,000 of them, but it's an expensive stock, and that would certainly be an opportunity worth looking at. Zoom seems to be turning the corner down here, and it's pulled back in what technicians would refer to as a falling wedge. Earnings per share are still strong, and moving averages are still heading down, but certainly above $400. It looks good to me. DraftKings fundamentals are not great, but I like this breakout and this gap up this morning, so I'm looking at that. And Square came back to this old top. I got stopped out of it just there last week, and I like the look of this now to push up to new highs in Square. And that's the SPX itself, folks. And if we get rid of earnings per share and get rid of this line, this level is a quite an important Fibonacci retracement of that last pullback, so it needs to get through this level, and if that's the case, then the game is back on again. As you can see, the 55 exponentially smooth moving average came in as support, but I think the moving average had less to do with it than this support level that was running through the market just about there. That resistance support, give or take the tails, and came in here on Friday. So I'm actually very positive. I think this market can move up very, very strongly now as the angst of that GameStop and that short squeeze situation is dissipated. The gold market is something quite different, and the gold market, I've got it here somewhere, gold market is broken down today, and unfortunately I think that bodes now for another test of this 1800 low quite quickly, and if that breaks, then another test of this 1763. Gold market, in fact, is sitting in the throes. The opportunity is huge. I put up a monthly chart. We can see that this huge cup and handle pattern, and this is the handle, and that's what we're playing for, a huge amount here. So it's not going to give us that money easily, so we're just going to have to sit and wait for that. I have a couple of gold shares in the UK. They're holding up exceptionally well, but I would expect a little bit more pain in those before this is all over. The one thing that I am quite sure of is that this is a corrective pattern, and I think probabilistically speaking that there's a very high probability that we're going to go significantly higher, but I suspect it may try and flush out quite a few people between now and that happening. In the UK market, well, UK market technically weaker than the American market, because if I go to the market timing chart, the medium term market timing measure in the UK market is down, whereas in the US it didn't move down. So the short term trend in the UK is down, but the medium term, the DEW, is also down. Longer term trend is still up. So folks, in the UK market, let's just stick to the facts. Market looking good today, there's no doubt about that. Markets are up a little bit today, but if your portfolio of stocks, if they should hit their stop losses as the general market is moving down, then think long and hard about just hitting the button and get rid of them. You can always get back in again. That said, I haven't done a great deal. And if I go to viewers, that's what I'm holding, and Games Workshop is off a little bit today, but the 100 level I think is still holding, and I've already added to that stock a couple of months ago, and if I see it breaking up from this level, then I shall add to it again. So I'm reasonably happy with all of those, but as the general market is starting to point down, then if they should hit stops, then I shall get out of them. There's some really good trading opportunities. Bellway, for example. Games, well, let's just chart them all while we're here. That's SLP. Precious metals, I think, probably all got a knock today, so it may take a knock with it, but trend is still intact. That is GYS.L, came into this zone between the 21 and the 55 as the market sold off, and broke up very strongly yesterday. Halma showing a textbook spring formation, nice candle yesterday. This I think can go much higher from here. As you can see, that's resistance, support, goes up, can't make a new high, comes back, and finds confirmation here. So that to me looks good. Tristel is moving strongly. JD Sports, well, I didn't like the way it broke that £8 level, but there was good strong corporate news yesterday on an acquisition, and it's on a hold. It was off a bit earlier, I believe, but still looks fine to me. CCC having another go at that old resistance level. and Pan-African Resources holding up well as gold comes off. Games Workshop, this is this level, and the last time I looked anyway, it still hadn't broken down below that tail, so there seems to be support down there. So if we were to in fact put on a fib between that low and that high, we can see that that tail is a 61% retracement of this last range, and I think that that's where the orders are. At least the last time I looked, the market was bid just about those levels. So I'm hoping. Hope is not a strategy, I know, but I'm hoping that that level can hold. Could easily go back to the 78%, that's for sure, but I'm hoping that level can hold. And if that were to hold, then we can actually quite easily see another push on that 120 high. As I said, I think last Friday, it would surprise me if it broke. I think it'll probably go up, pull back to that trend line, and then break on the fourth attempt. That's what they normally do. Might be a bit of angst there. Team 17 looks fine to me, and the GB Group, I really like this little stock. I think the stock can quite easily be a 10 bagger. It's intriguing little company. Pershing Square, probably the weakest of the whole lot. Need to keep my eye on it. And Bellway. It's a spring here on Bellway, folks, coming off this area, and I think really, really good numbers. There's Barrett is coming out with numbers later in the week, I think, and that'll be quite important. But this is a textbook spring formation, and I like it. And that's Polymetal still hanging in at that 78% retracement. There's going to be angst here, but I'm just hoping that that 78% retracement can actually hold the share. The numbers that came out of Polymetal last Friday I thought were outstanding, and clearly it pays you to hang around because it pays an exceptionally good dividend yield. Cranswick, well, it's just waiting on numbers, and that's Lion Trust Asset Management. There's a line in the sand down here. That's the place to buy in. If that level goes and we clip a sell recommendation, then it'll have to go. But the share, if you look at it over 5 years, really hasn't put a foot wrong here. So earnings per share rising very strongly, trebled over the last 5 years. Needs to get through that £14 level. So reasonably happy with those. But as I say, the trend situation in the UK market weaker than the American market. I'm hoping that we'll catch that up. Certainly we've had a very, very good day today in the UK market. So nothing done there, and still waiting to take positions in the American market. I don't think anything has changed since the last time we looked, and got to wait for the short-term trend of the American market to rejoin the longer-term trend. But certainly 2 very positive days, and let's just hope that the game is back on again relatively soon. Thanks very much indeed. Bye bye.